Imagine being able to predict high probability trading opportunities. Sometimes you spot what appears to be a significant order block. It seems like the perfect opportunity to ride the wave of smart money, right? But beware, my friends, not all order blocks are what they seem. Genuine order blocks are usually supported by multiple factors, which I'll be revealing in this video. I will be discussing genuine and fake order block identification. So if you are ready to avoid falling into smart money traps, stick around as I break down this concept and share tips on how to spot valid order blocks and avoid fake order blocks. So moving on right here, valid order blocks are high probability trading opportunities, while fake order blocks are smart money traps used by market makers to deceive retail traders like you and I, alright? So you need to understand that not all order blocks are valid. Some hold the key to profitable trades, while others lead you down a path of losses, okay? But what exactly are order blocks and why are they so critical for you as a Forex trader? With that being said, let's head right to my screen, okay? So right here guys, in Forex trading, another block refers to a significant area on a price chart where a large number of buy or sell orders were executed, which results to a strong impulsive move, also known as balance, alright? In a bearish trend, some traders say order block is the last bullish candle right here, okay, before the bearish move right here, alright? So right here, let's say we have something like this, okay? Let's say we have, a bullish move like this before price broke our previous low right here, okay? You would realize that right here is our order flow, okay? So this is our flow right here. So where is our order block? Right here, you can clearly see that this is our order block, okay? So this implies that the order block right here, okay, is a refined order flow, alright? You can also use this to refine your entry. The other block right here is a refined entry or area where you can minimize your risk and maximize your profit. So let's say instead of entering the trade from here, right? Okay, this is your order flow right here, okay? So you can sell at a better price when price gets to your order block, alright? So right here, as you can see, okay, the order block is not just the last bullish candle before the sell. There are criteria to be met, alright, for this to be your valid order block or for the bullish candle to be a valid order block, which I'm going to be sharing in this video. So guys, one thing you need to note is that in smart money concept, which is also known as the SMC, order block is secondary, inducement and liquidity are primary, okay? Most SMC traders think order block is everything in the forex market. Without order block, they cannot buy, they cannot sell. So you need to understand that inducement and liquidity are the primary thing in forex market, while the order block is secondary. Why is this so? Because after market takes out inducement, we have multiple entry points. Okay, so right here, as you can see, price broke our previous low right here. Okay, so where is our inducement? After break of structure, after change of character, the next thing is to look out for your inducement zone. So right here we have our inducement right here. Okay, so after market takes out inducement, like I said previously, we have multiple entry points. All right, we have the order flow, okay, which let's say we have our order flow right here, right? So let's say we have our order flow here, we have our order block, we have supply, we have demand, we have imbalance, and so on. So this implies that before you buy or sell, okay, price ought to take out inducement or liquidity. All right, so that means having identified our inducement zone right here, okay, before we go short on this trade, we need to wait for price to take out inducement, right? So sometimes we see price taking out inducement without mitigating any POI and then push lower, breaking our major structure low, okay? And in some cases, we can see price push higher, right? Mitigating our order flow right here, okay? And in some cases, we can see price push higher above our order flow and then mitigate the order block, okay? And then push lower, breaking our major structure. So as you can see, guys, with this, it's obvious that inducement is primary, okay? So before price mitigates any other flow, order block, inducement must be taken out, all right? So guys, if you do not understand the concepts of inducement, you can check out my video on inducement and get more clarity on that, so you can also understand the concept of order blocks, all right? So how do you identify a valid order block? First, order block should sweep the high of the previous candle the other block should have a clear imbalance, and thirdly, the other block should have inducement. Okay, so let me quickly explain this in detail so you can have more clarity of this concept. Okay, so right here on the first diagram, the first criteria for a valid order block is that the order block candle, right, to sweep the high of the previous candle like this. Okay, or if we have a previous structure like this, okay, the order block is also valid if it sweeps the high of the previous structure like this. Alright, this is a downward trend scenario, guys. So if the order block does not take out the high of the previous candle or previous structure high, it's likely to be a smart money trap. Alright, so that's the first criteria of a valid order block. There should be a sweep of the previous high. Okay, so having understood this, what is the second criteria to identify a valid order block? Having swept the high of our previous candle right here, next is that the order block should have a strong impulsive move downward. Okay, because this is a downward trend. All right, so this strong impulsive move right here, okay, signifies or verifies the large number of orders that were executed. So remember, like I said previously, the order block is an area where a large number of buy or sell orders were executed. So for a downward trend, order block right here is an area, right, where we have large number of sell orders that were executed, which resulted to this impulsive move right here. Okay, so to validate an order block, we need to see a strong impulsive move, which is the footprint of the large numbers of orders that were executed around this zone. Okay, so guys, this strong impulsive move is what we refer to as balance. So on that note, guys, a valid order block should have a clear imbalance. So if you are confused about what an imbalance is, guys, you can check my video on FVG imbalance on this channel. Okay, so you can have more clarity about this concept. All right, so as we can see here, our order block swept the high of the previous candle and has a clear imbalance right here. Okay, so having understood this, what is the next criteria to look out in identifying a valid order block? Next, guys, is inducement. Okay, a valid order block should have inducements. This implies that you need to apply inducement and liquidity before you buy or sell at any order block. Okay, so as we can see right here, our order block candle right here has imbalance. Okay, and also has a clear inducement right here. Okay, so as you can see, we have a break of our previous low, giving us this as our inducement. So we are expecting price to push higher, right, to mitigate our that block right here after inducement has been taken out. So remember, do not buy, do not sell without inducement. Okay, so guys, since all our criteria has been met, all right, we can now go ahead and place our sell order around this zone. Okay, this is our order block right here, the clear imbalance and inducement. Let me mark this out clearly so you can understand. So this is our inducement zone right here. Okay, so we are patiently going to wait for price to mitigate order block. So once price pushes higher, right, give us a reaction around this zone, push higher, mitigate our order block right here. We can now enter our sell position at this zone right here. Okay, so we just employ our short position. Our profit target is going to be our previous low right here, and then our stop loss is just going to be above our order block candle right there. Okay, so guys, remember this low here is our first profit target, because in a downward trend price ought to make new lows. Okay, we can still extend our profit target lower like that. All right, so guys, before you sell at any other block, sure that it has met all the criteria that I have highlighted in this video. Okay, so having met all the criteria, what you need to do is to wait for price to revisit other block around this zone. All right, remember, inducement must be taken out, there must be clear imbalance. Okay, once all these conditions are met, so you can enter your trade right here using any of the entry model which I teach on this channel, though there are high probability entry model which I teach in my mentorship program. Okay, so moving on, so let me take this out so we can have a better view. Okay, so moving on, guys, what is an invalid order block? An invalid order block is any order block that do not meet the criteria I outlined for a valid order block right here. Okay, an invalid order block is a smart money trap. What is the reason to a failed order block? How do you identify and avoid this smart money trap? Alright, so guys, the first step to identifying a fake or invalid order block is to look out for entry after inducement. Like I have said previously, if there is no inducement, the other block is likely to be a trap. So guys, the first step to identifying a fake or invalid order block is to analyze the order block, okay? So let's quickly analyze our order block handle right here, okay? So guys, do we have a valid order block right here? As you can see, this is our last bullish candle right here, okay? So it implies that we had previous candles right here, okay? Or we have a swing like this right here. So having understood this, we can see that price took out the previous swing high right here or previous candle high, okay? So this is a valid order block candle right here that met our first criteria, okay? So we will still proceed to analyze the order block further, right? Does this order block have a clear imbalance? So clearly, guys, as we can see, we have a clear imbalance right here. Second criteria met, all right? With our first and second criteria, the first and second criteria being met, okay, we are going to take a look at the third criteria. Does the other block have a clear inducement? As we can see clearly here, our previous low still protected, right? Price did not go below our previous low. So there is no inducement in this zone, okay? So some traders do the wrong thing, alright? They mark here as inducement, mark here as inducement, and mark here too as inducement, alright? So as you can see, these inducement zones did not break any low right here, okay? All our lows are still protected. So we need our inducement to break our previous low right here, alright? So since price did not break our previous low, so this other block right here has been devalidated, okay? So if you are confused about the concept of inducement, you can check out my video on inducement on this channel. I will drop the link in the description box below, okay? So guys, having analyzed the other block, right, as you can see, there is no valid inducement. So remember, first step is to analyze your order block, and then next is to look out for entry after inducement. Guys, if there is no inducement, the other block is likely to be trap, okay? So basically, the reason why order block fail is buying and selling without inducement and liquidity, okay? You need to understand that price needs to take out inducement before you buy or sell, else you fall for smart money traps and become the liquidity. So always ensure, guys, that there is a liquidity sweep or inducement before you buy or sell. Why? Because inducement, liquidity acts like oxygen in the forex market. They drive the market higher or lower, okay? So let's take a quick example here. Let's say price failed to take out this low, creating our inducement right here, okay? Then you still went ahead as a trader to mark out this as your order block right here, all right? So this implies that there is no inducement here, and the only valid inducement right now is this zone, all right? So having identified this as our inducement means this other block right here not valid for our setup. So there is a probability that price is going to push higher, right? So what will happen is this: market is going to push higher, right? Mitigate the other block around this zone, give a reaction, inducing more traders to enter their sell positions around this zone, okay? And then definitely they will set their stop losses around this zone, okay? So this reaction right here, guys, is enticing more traders to go in on this trade. This is a false signal, okay? When there is no inducement before your order block right here, do not fall for this, okay? This is smart money trap. So this is what is going to happen right here, okay? Let me adjust this so we can have more understanding of this concept. So after inducing more sellers to go in on this trade, all right, then you see price push higher, right, taking out inducement from this zone, thereby making all the traders that took this trade around this entry the liquidity, okay? So this is why you need to wait for inducement before you buy or sell. There is no inducement, that means the next previous high or low may likely act as the inducement zone, and you wouldn't want to be in this trap, all right? So after price takeout inducement here, the entry criteria which I teach, which you can use to ride this trade downward, all right, like this, back to our previous structure. So guys, order block can be used as a high probability POI or entry model, okay? So before you buy or sell at any other block, ensure that the other block meets all the criteria that I have highlighted for a valid order block. Okay, so moving on to the next scenario right here. So right here in this next scenario, let's quickly analyze our order block to see if it is valid or invalid. Okay, so our first criteria, the order block should sweep the high of this previous candle. Condition has been met. The second criteria is that to see our order block have a clear imbalance, all right, signifying that there is a large number of orders coming from this zone. So as we can see right here, guys, you can see that the order block has been mitigated. Okay, unlike in this case where we have a clear imbalance and we needed inducement, push higher, mitigate our order block. Okay, so in this context right here, order block candle has been mitigated. So what do we do right here? In this context, seeing that the order block has swept the high of the previous candle, so right here we can now move to the second candle. It has imbalance. Okay, so this is our order block candle right here, and the next candle just after the order block candle has a clear imbalance right here. Okay, so on that note, our order block would now look like this. Okay, we are going to extend it from the second candle to the high of the order block candle like this, right? So if you want to go in on this trade and your stop loss is big, I think how to refine entry to minimize risk and maximize profit. Okay, so having understood this right here, guys, this now becomes an imbalance. Moving on, we further go ahead to analyze if we have a clear inducement. Looking right here, guys, you can see our previous low was taken out, and then we have our clear inducement, which we expect price to push higher, right, and then mitigate our order block around this zone. So guys, we can see that this is a valid order block. Okay, so guys, before we head to the charts, let's take a look at few more examples for you to better understand this concept right here. Okay, so guys, moving on right here, let's quickly analyze this order block as well to see if it's invalid or valid. All right, clearly we can see it took out the high of the previous candle, has a clear imbalance right here, but as we can see, there is no inducement taken out. Okay, so this is assumed to be more candles pushing lower right here. Okay, there is no pullback or break of previous low right here, so this is invalid. So let's proceed to the next. Right here we can see other blocks swept the high of the previous candle. We assume that there is a structure high right here. Okay, swept the high, has a clear imbalance, no inducement. Guys, I'm emphasizing on the concept of inducement, very vital. So let's quickly move on to the next one, guys. This is invalid, as you can see. Moving on to the next scenario here, guys, you need to pay attention right here because this is a bit complex. As we can see here, we assume there is a high here where price swept liquidity from and closed below. Okay, so this is our valid order block. So how do we analyze our imbalance in this case? As you can see, we have multiple candles right here, all right, before the strong impulsive move. So how do we analyze this? Okay, for more clarity, guys, you can watch my video on imbalance, right? I'll drop the link in the description. So moving on here, as you can see, our high right here is still protected, our low is still protected. So these candles right here are called inside bar candles because they do not go beyond the high, neither did they go beyond the low. Okay, so having understood this, guys, it's assumed that there are no candles right here, so this still remains our second candle, just like we had in the previous scenario. All right, so always train your eyes to identify these deceptions in the forex market. Okay, now because I have highlighted that the order block candle should sweep the high of the previous candle, then you see some persons mark this as a valid order block right here. All right, why? Because this candle here sweeps the high of our previous candle. Guys, this is smart money trap. Okay, do not fall for this trap. This is not a valid order block because it is an inside bar to this candle. It is invalid. Okay, so this implies that if you do not mark out your order block correctly like this, okay, this is a valid order block right here. So if you do not mark this out correctly like this and you go ahead to mark out this inside bar as your order block, it implies that price may not trigger your order here. Why? Because price may likely, mitigate this zone here and then push low. All right, you can see price do something like this. Okay, take out inducement from here, mitigate here like this and push lower. All right, so guys, as you can see right here, okay, all of these are inside bar candles. All right, it takes careful analysis of the order block candle to identify this. Okay, so that is why I highly recommend you analyze your order blocks to ensure you are not buying or selling on a smart money trap. Okay, so let's really take a look at one more scenario to help you better understand this concept. Okay, so moving on here in this scenario right here. Okay, so as you can see here, the order block met our first condition right here. Okay, swept the high of the previous candle, and the next condition is for the order block to have a clear imbalance. Right here, as we can see, guys, the order block has been mitigated. Okay, so having mitigated the order block, what next do we do? So this is a little more complex, right? This is where most traders ask some questions like, how do we get in on this trade? Where is our POI? Where is our order block? Where are we looking to short? Okay, guys, this is an advanced concept you need to understand, which I also break down in details in my mentorship program. Okay, seeing that everything here has been mitigated, we can now go ahead and mark out this unmitigated wick or shadow here as our POI or order block right here. Okay, note, guys, you don't just mark out any wick as your POI or order block. Okay, there are certain criteria that needs to be met to validate your wick as your POI or order block. All right, so in this context, the wick should take out liquidity from the previous candle right here. Okay, verified. Then the next is that the wick should be more than 50% of the body of the order block candle, like this. Okay, so you don't just go ahead mark out every. So in this context, as you can see, we have a valid POI around here. Okay, and if you look closely, we also have our inducement right here. Okay, further validating our POI right here. All right, so like I said, this is an advanced concept. Okay, so once all your conditions are met, then you can go ahead and employ your short position right here. Okay, once price mitigates order block, then you can go short on this trade with your stop loss just above the order block candle, and then your profit target will be the next structure low. And since price pushes lower in the downward trend, you can also choose to extend your profit target. All right, so moving on, guys, let's head to the next scenario right here. All right, so in the next scenario right here, we can also see that the order block met our first criteria right here, and the second criteria, which is to have clear imbalance here, has been validated because price did mitigate the order block candle around here. So in this context, right, we can also go ahead and use the wick right here as our POI, right? Once price mitigates, then we can go short. Remember, guys, not all wicks are valid POI or order blocks. Like I said, this is an advanced concept which I break down in details in my mentorship program. Okay, so on that note, we also validate this as our order block, and then once price mitigates this, we go short. So let's quickly head on to the last scenario in these examples. All right, so in this case, as you can see, the order block met our first condition right here, and the second condition, which is that the order block should have a strong impulsive move, also known as the imbalance. Okay, so we can clearly see that there is a clear imbalance sitting right here. Moving on with our analysis, we can also see that we have clear inducement sitting here. But remember, guys, different market conditions plays out on the chart. Okay, so sometimes you can see price push higher, all right, mitigate the imbalance zone. Okay, and then you can still see price further push higher, mitigate the order block. All right, so after price mitigates the order block right here, okay, so traders get involved in this trade. All right, and then price starts pushing lower, and then we get excited on this trade, and suddenly you see price starts pushing higher. At this point, you're wondering, where is price heading to? Guys, if you look closely, you can identify an unmitigated wick around here. Okay, so there is a probability that price is pushing higher to mitigate the unmitigated wick right here. So having understood this, we have our valid imbalance zone right here. Okay, and then we also have a valid order block right here, guys. And then if we also look closely, we still have a valid POI above the order block zone right here. Okay, so price can mitigate any of these POIs. So remember, guys, in all your trading, you need to have a trading plan and stick to it. Why? Because different market conditions plays out on the chart daily. Okay, and you do not want to get carried away with the noise in the forex market. In summary, guys, identifying valid order blocks are necessary for you as a forex trader. Other blocks can be a part of your trading strategy. Valid order blocks can also be used as a high probability confluence for making good trading decisions, including entry, exit points, stop loss placements, and overall market analysis. So guys, it's important to remember that order blocks are just one tool among many tools used in forex trading, and you should use the order blocks trading styles, trading strategy in conjunction with other forms of analysis, be it technical analysis or fundamental analysis, so you can have a comprehensive decision making. Okay, so with that being said, let's head to the chart to have a practical example of all that we have been discussing. Here on the chart, we are going to proceed to identifying fake order block, right, and smart money traps. But before we proceed, guys, you need to ensure that your order block meets these three criteria for you to buy or sell. Just like I have mentioned earlier, your order block needs to have inducement below it, it needs to have a clear imbalance, and the order block candle needs to take out the previous candle high for a sell trend and the previous candle low for a buy trend. Okay, so if these criteria are not met, then guys, you are probably selling or buying on a fake order block. So let's proceed. Guys, here on the chart we can see that the markets have flipped from buy to a sell, right? So right here, where is our flip zone? We can identify it clearly from here, right? Where we also have kind of our chalk. Okay, so here is our flip zone. So after this, what do? We identify our order blocks. Okay, so some persons mark order blocks as this zone, and then some will also mark the other block around here, and then some will also mark another order block right here. Then we also have some persons mark out this zone as well as their order block. So guys, which of these order blocks are correct? Which one is a smart money trap? So looking closely at this from what we have previously discussed, you can clearly see that we have all of these candles, right? All the other block candles that we have identified here, sweeping the high of the previous candle. Okay, we can also see this candle sweeping the high of the previous candle. Same is applicable here, sweeping the high of this candle, and also this red candle sweeping the high of this candle. So at this point, our first criteria has been met. Okay, so let's check out for other conditions, which is imbalance. All right, let's see. So from our second condition here, which is the imbalance, as you can see, the first order block right here, okay, does not have clear imbalance. Basically, what is imbalance? Imbalance is the gap between the low of the other block candle, right, and the high of the third candle, okay, which is here. The low of the other block candle and the high of the third candle. So as you can see, there is no gap between the low of the other block candle here and the high of the third candle. So there is no gap here, which means this other block has been mitigated. So since this other block has been mitigated, it's no longer valid for our setup. All right, other blocks need to be mitigated just once for it to be valid. Okay, once another block has been mitigated, it's no longer useful. But other flow supply demand zones can be mitigated more than once, but other block can be used just once. So since this other block has been mitigated right here, okay, then we'll go ahead and delete this, right? And then we'll proceed to the next order block. So right here, do we have a clear imbalance? Obviously, yes, guys. You can see that we have a clear imbalance right here, okay? So there is a gap right here, right? And there is a gap here. So this is the clear imbalance, right? So this order block have met our criteria, okay? So let's proceed to the third order block, to the next order block, I mean. So the next order block right here, we have a clear imbalance, as you can see. So this is also what? Valid. And then the third order block as well have a clear imbalance right here. All right, there's a gap here, okay? So this is a clear, these have met our criteria. So let's now move on to our next important criteria, which is inducement. Okay, so let's start with the first order block here on our chart. This first order block, does it have a clear inducement? Yes, we have a clear inducement just below it, so this is valid. All right, and then moving on, do we also have for the second order block right here, I mean this order block, do we have any inducement sitting below it? Yes, guys, we have inducement sitting below it around here, so this order block is valid. All right, then for the third order block, do we have any inducement sitting below it? No, guys, there is no inducement sitting below it, so this order block is not valid. So I'm going to go ahead right now and delete this other block. Okay, So we are done analyzing our order block, and what are we going to do? We are now going to wait for price around this zone. Okay, so once price breaks this level, then we expect price to react at this zone, and then we go short. So guys, for the fact that price defies this order block does not mean that price has changed direction. There is still an extreme order block that price can mitigate before going short. So if you are stopped at around this zone, then you can actually wait for price around this zone. So let's play price forward and see what we've got. So guys, as you can see here, right, price tapped into our order block, gave us a reaction and pushed lower. All right, so right here we can see that as price tapped into our order block, taking out inducement from here, then price broke structure. So here we have a break of structure right here. Okay, so after break of structure, what do? We identify our next order block to keep riding the trend. Okay, so right here we are going to identify our order block. So let's take out this, guys. This has been mitigated. Like I said, order block can be used just once. All right, so this has been mitigated and we do not need it anymore, so I'm going to take it out. We also have an unmitigated order block here, so price can actually come back to the zone. But let's identify our order blocks right here after the break of structure and see what we've got. So right here you can see some persons marking their order blocks like this. They mark this right as an order block. Okay, and then guys, can you tell me where else you can spot as an order block? All right, so right here some persons mark out this zone right here as their order block. Some persons also mark this level as their order block. All right, so as you can see clearly, which is a valid order block, right? Let's start from the first scenario. This has not been mitigated. This one has already been analyzed before now. So let's proceed to the second scenario right here. All right, so for the second scenario here, guys, we can see that the order block have a clear imbalance. All right, there's a gap between the low of the order block candle, right, and the high of the third candle. So there is a gap here. It has not been mitigated. All right, it has not been mitigated, so this is a clear it has a clear imbalance. All right, and then another criteria, the order block candle swept the high of the previous candle, the high of the green candle. It swept the high of the green candle right here. Okay, so it has met our second criteria, and then it has a clear inducement right below it that broke structure. Okay, so this, after the break of structure, where is our inducement? This is our inducement. So this order block have a clear inducement, took out the high of the previous candle and have a clear imbalance. So this is verified. All right, so we have our next order block right here. So guys, another thing you need to understand, like I said earlier, some persons mark out the green candle and say the green candle is the order block. So guys, some persons who mark this green candle as the order block because they believe that the last green candle or the last bullish candle before the sell move is the order block. No guys, order block can be bullish or bearish. As long as it sweeps the high of the previous candle, that is a valid order block. Okay, so this order block here is verified. Now moving on to the next candle or to the next order block that some traders could mark out as their order block, or some mistake that most traders do, is right here. Okay, so as you can see, the green candle swept the high of the previous candle. We have a clear imbalance around here. All right, we have a clear imbalance around here, and then look here closely. After marking out our imbalance, the next thing is to spot out our inducement. Now some people, let me zoom this, all right, so we can see clearly. So some people mark this as our inducement, guys. This is not a valid inducement, because if you look at this, this is what inside bar. These candles are trading inside the red candle. It did not sweep the high of the previous candle. All right, you can watch my video on how to identify a pullback. So this is not a valid pullback to qualify it an inducement. Okay, so it broke the previous low, just like you can see. So guys, these are some smart money traps that you need to be aware of. All right, so this is not a valid pullback because it did not sweep the high of this candle. All right, so this is not a valid inducement. So obviously this order block does not have a valid inducement. All right, so this is not a valid order block. Moving on, we are done analyzing these order blocks. Okay, and I will go ahead now and delete this order blocks, right, that are invalid. So these are smart money traps. They are fake order blocks, all right? They are not valid. So what are we going to do? I'm going to play price forward right now. Let's see what how the price reacted on these our order block zones. All right, let me play price forward and see what we've got. This order block has not been mitigated, so probably we are expecting price to mitigate these order blocks. So let me place price forward and let's see what we've got. So guys, right here we can see price mitigated this order block after taking out inducements around here. So guys, always buy, always sell after taking out inducements. Remember, this is our inducement, this is our break of structure right here. Okay, let's mark it out. This is our inducement seated right here. All right, so and then we have our break of structure around here. Guys, always know how to mark this out. So we have our break of structure here. So here is our break of structure, here is our inducement. Where is our order block? This is our order block, right? It is our order block. Why? Because it has its inducement sitting below it. It has a clear imbalance. It swept the high of the previous candle, and price, after sweeping liquidity, tapped on our order block and pushed lower, breaking the structure. So after break of structure, what else are we going to do? We are going to look for order blocks to continue riding the trend. All right, this order block has been devalidated because price has tested or mitigated the order block. So let's proceed to identify the order blocks and ride the trend. Let's delete this and mark out our recent order blocks. All right, so some traders will mark out their order block here, and some traders will mark out their order block here. All right, they will mark this green candle. They always say the last bullish candle, before the sell move. All right, so let's mark it out this way. So guys, some traders mark it this way, and then we also have some traders who would also mark this level, right, as an order block. Remember, this level has been unmitigated, right? It has been unmitigated. And then, so let's see which of these, guys, from what we have done so far, do you think is the correct order block? So guys, let's start from here. All right, let me zoom this a little so we can see clearly, because I want you to have a proper understanding of what is going on here. Okay, so guys, let's start with this. All right, now let's see, is this order block valid or not? So guys, these smart money traps are so cunning that sometimes you may not even be able to identify them if you don't pay keen attention on the chart. This order block is not valid. Why? Because we just have one candle move here. All right, we have the high of this candle and the low of this candle. So note, the only candle that have closed below this candle is this candle right here. All right, this candle here, this is the only candle that have closed below this low. So it is assumed that this is just one candle move. So all of these candles trading inside here are just inside bar. Okay, it is not valid because it did not close below this other candle. So these are all called inside bar candles. So whatever is happening inside here, whether it's an engulfing or whatever it is not valid, because the only way this candle will be valid is if there is a break below. So on that note, this is just seen as one swing, like one move. All right, you need to understand this concept, else you will keep falling into the smart money trap. So guys, moving on, the same thing with this candle as well. So you can also see another candle here. This is another candle right here. I want you to understand this concept. This is called inside bar candles. So you need to train your eyes to be able to identify them. Right here we also have another inside bar candle. So as you can see here, all of these candles are trading inside the high and the low. So it is assumed that this is just one candle. All of these are one candle. So guys, the second candle now is this week's that swept this low, and all of these candles are still trading inside it like this. All right, so what we have is we have one candle, this is the momentum candle, and then we have two candles. This is the second candle, guys. So we just have one candle, right, and then this is the second candle. So obviously what this implies is that we have just one swing like this. Okay, just one swing. So having this as one swing, there is no inducement sitting here, there is no inducement sitting here. This is our valid inducement zone. So this is a valid inducement that broke structure. So there is no pullback here as to validate this our inducement. Do you understand? There is no also valid pullback here that can say, okay, this is our inducement, because these candles are inside bar. Guys, I hope you understand. So on that note, this other block is not valid. So I'm going to go ahead right now and delete this other block. Then let's take a look at the next other block. Okay, so moving on to this next other block, some persons say this is the last green candle, before, or the last bullish candle before the sell momentum. Guys, this is not valid because this green candle did not sweep the high of this candle, did not sweep the high of this candle. Guys, obviously you can also see it is also an inside bar candle. Look at this. This is the low of this candle and this is the high of this candle. So it's obviously trading in between this green candle. There is no high, there is no low, so it's invalid. It is useless because it is an inside bar candle. In fact, every inside bar candle is useless, guys. Quote me anywhere. So moving on, guys, you can see that this other block is not valid. This is smart money trap. All of these are smart money trap, because if you don't understand this concept, you will be waiting for trade around this zone, and you could possibly enter this trade and then to stop you out, mitigate a valid order block, and then you'll be wondering what went wrong. What went wrong is that you do not have this basic knowledge to understand this concept, which I am sharing. So I believe after this video you are not going to make these mistakes anymore, right? So on that note, this order block is invalid. It is a fake order block. It is the smart money trap. So I'm going to go ahead right now and delete it. So let's delete this and look at the extreme unmitigated order block. Okay, so right here I'm going to delete this. Moving on, guys, as you can see here, this is the unmitigated order block. Okay, where is our inducement? We have our inducement sitting around here. All right, so we have our inducement sitting here. Okay, so this is our inducement, right? So why is this our inducement? We have a break of structure. Where is our break of structure? This is the valid pullback, okay, that swept the high. There's no inside bar around here, so it swept. There is a valid pullback that broke structure. Okay, so where did we have the actual break of structure? Because whatsoever that is happening around this zone, just like I've illustrated, we are inside bars, right? So where did we have the actual break of structure? We have the actual break of structure around here. So this was the candle. This red candle here broke these structures. Okay, so this red candle broke the structure, and this is the high responsible for it. So this is our valid inducement. So all of these are internal structures. Train your eyes to be able to see this. If you are confused somehow, you can watch this video multiple times to get proper understanding. And if you still want me to hold you by the hand, you can sign up for my mentorship program, where I teach all of these concepts in details. Okay, so moving on, having identified our inducement, then let's proceed to the other block candle. All right, this is the other block candle. Obviously swept the high of the previous candle, so this criteria has been met. And then moving on, does the candle have clear imbalance? Guys, I want to ask you, take a very good look at this. You need to train your eyes, guys. Does this have a clear imbalance? Let me know in the comment section. Okay, at this juncture, I believe you have dropped your answer in the comment section. Okay, so at this point, we have a clear imbalance. Okay, so let me prove that to you right here on the chart. As we can see, this is the high of this candle and this is the low of this candle. So obviously, guys, you can see that this is an inside bar. These candles are inside bar. The only place we have a break is this candle. So if we are working with the wick of this candle right here, right, and the low of the other block candle, which I've always outlined, which is this, then you can see that we have a clear imbalance. So guys, if we are unable to spot this, you are going to assume there is no trade seated right here, and you can also make wrong trading decisions if you are unable to see clearly on the chart. So you need to train your eyes to be able to see differently, so you can act differently and trade differently from other retail traders, which is what I teach in my mentorship program. So guys, as you can see, we have a clear imbalance. All of these are inside bar, which makes them useless candles to us. I mean, they are not useful to us. Okay, so where is our imbalance? We have our imbalance seated here. All right, and then the low, the high of this other candle. This is the third candle, because these candles are inside bar, right? So always train your eyes to see these inside bar candles. So moving on, what are we going to do, guys? This is our valid order block here to go short. Okay, so let's go ahead, all right, and play price forward to see what we've got. All right, so guys, as you can see here, okay, price did mitigate our order block and dropped lower. This is our inducement zone. Okay, price took out inducement from here, mitigated the order block and dropped lower. All right, so guys, this in turn also has verified that this is a valid order block. Okay, so guys, there are so many examples out there, but let's take a look at this last scenario. Okay, I don't want this video to be long. You can go ahead and watch this video over and over again. Ensure you practice and backtest it, and drop your questions in the comment section, because I am right there waiting to answer your questions. All right, so we have a break of structure right here. So after this, what are we going to do? We can now start hunting for our order blocks. All right, so where is our order block? Some persons mark out these levels right here. Okay guys, let me take out these other previous order blocks that has been mitigated around here. Okay, so let me take this out. Right, it has been mitigated. You still have an unmitigated order block here. I mean, we are still going to leave it until it probably becomes useful or not. So right here, some persons after break of structure, as we have identified here, let me draw this correctly. So after a break of structure right here, some persons now mark out this as their order block right here. Okay, there's another block here, and then some persons also mark out this level right here, all right, as their order block right here. Okay, right. So guys, which of these do you think is a valid order block? Let me zoom this out so you can see clearly. Okay, so let's go ahead and analyze it quickly. Right here, as you can see, the first criteria, this candle took out the high of the previous candle, but there is no clear imbalance. As you can see right here, there is no gap between the high of this candle and the third candle. So you can see that it has been mitigated, right? Price has mitigated the order block. I mean, price has tapped into the order block right here. So on that note, this order block is invalid. Okay, this order block is invalid on that note. So let's take this out. Right, let's quickly delete this. Right, so as you can see here, we have just one order block sitting here. First off, this order block swept the high of this previous candle. All right, and then it has a clear imbalance right here. There's a gap between the low of the order block candle and the high of the third candle. Right, all right, so if you're counting, this is the first candle, this is the second candle, and this is the third candle. Okay, so guys, this is the this is the low of the order block candle, and this is the high. So we can see there's a gap here, so there's a clear imbalance. All right, so on that note, it has met our two criteria. Guys, as you can see here, there is no inducement. Okay, you need to understand that there is an exception to this. All right, you can watch my other videos to better understand this. So as you can see, market just took out inducement from this zone, right, and from this zone. Okay, we just had a swift move to the upward direction. So like I said, there is an exception to this. So you need to know that whenever there is a sweep, right, a liquidity or inducement sweep, you don't need an inducement to buy or sell. All right, so what we are going to do, we are just going to wait for price at our order block, especially when the market is in your direction. All right, so we are going to wait for price at this order block that we have identified around this zone. Okay, so on that note, we are going to use our entry model on a lower time frame to enter this trade at this one, because market just swept inducements from here. So we are not expecting another inducement from here because we just have a sweep here. All right, so on that note, let's play price forward to see how price reacts at the OB. So once price gets to our OB, we scale down to the lower time frame, because we don't just jump in at the order, but we scale down to the lower time frame and use our entry model to enter the trade right from this zone. All right, so since we are not expecting an inducement, let's play price forward and see how price reacts at this zone. Let me extend this so that we can know when price gets to this level. Alright guys, price has tapped into our order block. Right, let's scale down to our entry time frame, be it 5 minutes, 3 minutes, 1 minute, or any time frame that's suitable for you for your entry. Then we are going to see how we can get involved in this trade. So let's scale down. Let me just take this out so we can see how we can get involved. Let me take this out from here so you can see how we actually take our entries. All right, so for the purpose of this lesson, I would like to use the 1 minute time frame for my entry so you can understand how these entry models work. Right, so let me quickly switch to the 1 minute time frame and let's see what we've got. So here guys, on the 1 minute time frame, as you can see, price has tapped into our order block, right? And then we have, you know, as the market is buying, just like I've taught you how to identify your structures, you can see you have your inducement sitting right here, okay, for the buy. All right, have your inducement sitting here for the buy. So after inducement has been taken out, then we have our chalk right here. Okay, this is our entry model, guys. This is our chalk right here. So we are expecting price, right, to sweep. Let me mark this out. So we're expecting price to break this structure, right? And then after this, we can now enter into the trade. You don't just enter once the trade mitigates the order block. No, we buy or sell after change of character. All right, so this is one of our entry model that I teach. So right now I'm going to play price forward. Let's see how it reacts and how we get into this trade. All right, so guys, like I said earlier, right, previous inducement has been taken out, okay, to fuel the minor buy trend. All right, now that brings us to our chalk. All right, and as you can see, our chalk has clearly been taken out around here. So after our chalk, we now move ahead to identify our order block. So right here, as we can see, we have our order block sitting around here. Okay, so guys, let me zoom this out so you can see clearly. Okay, you can see that this is our order block. It swept the high of the previous candle, okay, but our order block does not have a clear imbalance. You can see this is the third candle, right, which shows that it has been mitigated, like it has mitigated the order block. So the order block is not valid, and the order block as well does not have any clear inducement around here. So on that note, this order block is not valid. So when I started this video, I said something that the order block is just a refined entry or area that you can minimize your risk and maximize your profit. As I said, the order block is an extreme order flow, okay, is a refinement of your order flow. So right here you can see that this is our order flow. So since the order block has been mitigated, this is our order flow. All right, and from the illustration I gave also, then this is our order block, which is a refinement, all right, to give us a refined entry or a better entry. So now, since our order block has been mitigated, I'm going to delete this. So right here we have our order flow. Our order flow has not been mitigated, so this is where we are going to wait for our price to go short. So after the chalk, since the order block has been mitigated, then we go with the order flow. Okay, so let's play price forward and see how price reacts at the order flow. So guys, price is at our order flow, and as you can see, we have a nice engulfing candle around this zone. So let's impute our short position and see what we've got. So right here we're going to enter after the engulfing candle. Remember your candlestick confirmation. So right here our SL is just going to be around the order flow zone. Okay, so just above the order flow zone, which is roughly around 8 pips, and then we are going to target our 15-minute low. So I'm going to switch back to the 15-minute time frame right here. Okay, so we are going to be targeting our 15-minute low. All right, so guys, this is our 15-minute all-time low around here. Guys, I hope you have known how to mark out your structure. So this is our low. These here right here are all internal structures. All of these are internal structures, so you need to know how to mark your structure so that you wouldn't make mistakes. So on that note, we are targeting our 15-minute low right here. Sometimes guys, trade may not actually get into this point. No, we are just speculating on price. We are not certain. That is why you need to apply proper risk management, and not just proper risk management, you can also break even. All right, so we also have, sorry guys, we also have internal structure. So we also have internal structure around here. All right, as you can see, we have internal structure around this zone. So you can break even when price break here and then hold to your trade here. And you can also break even because in a downward trend the low is weak. Price have every tendency to break this low, so you can break even and also hold the position while you go short. But for now guys, let's play price forward and see what we've got. So guys, as you can see right here, we hit our take profit on this zone. All right, when market has hit our take profit. All right, but there's one thing I want you to understand, guys. Let's take a look at this chart again. Like I said earlier, market has collected all inducement or liquidity from this zone swiftly. Okay, so what we do is to wait for price at the order block. After a sweep or liquidity or inducement, okay, we do not need inducement to sell. Okay, there are exceptions to this, and this is one of the exceptions which you need to train your mind to see. Can you see that? So after this swift move, right, we do not need inducement to sell. We just wait for price at the order block. Once price taps on the order block, you can always scale down to the lower time frame entry, which I just showed you right now. Okay, so guys, I believe you've been able to know how to spot out fake order block and valid order blocks. So to avoid fake order blocks, guys, pay attention to supporting evidence. Genuine order blocks are usually supported by multiple factors such as inducement, imbalance, liquidity sweep of the previous candle. All right, so if the order block lacks these supporting factors or doesn't align with the bigger market picture, guys, it's likely a smart money trap. So guys, I hope you found this video helpful. If your answer is yes, please make sure to like, subscribe and share with your fellow traders. Thank you for watching and stay connected to wealth.